We are starting the event. Bismillahirrahmanirrahim. The event is online also in YouTube also, our channel, Ahmed Al Akbari Chartered Accountant. And Sharina, can you share the link on the chat bot so we can
Yes.
start? Okay, Bismillahirrahmanirrahim. Assalamu alaikum, everyone. This is Saeed Asizaman, your host, and today we are talking about a very interesting topic, and which is in demand nowadays in UAE. It's the basic of anti-money laundering laws and its applications on the business in UAE. Thanks for all of you for joining this event. We have two speakers today on that one. Money laundering is a global concern that can target the individuals, including the professionals or the organizations lacking risk assessment, inadequate customer due diligence, failure to report suspicious activity expose you and your firm to disciplinary or a criminal prosecution. The importance of meeting your legal or regulatory obligation in this area cannot be undermined. And this session we try to equip you with the aspects of anti-money laundering regulations to demonstrate its compliance. UAE is committed to combating illegal financial activities such as money laundering and financial terrorism. The country policies and strategy detect and deter the financial crimes on its soil and prevent the use of its land for transit routes or transfer funds resulting from any criminal activities. The UAE also supports global efforts to encounter money laundering and combat the financing of terrorism, seeking the full implementation of standards of Financial Action Task Force, which is FATF. Now, our first speaker is Mr. Badr Zaman, who is very well known. Mr. Badr Ahmed is a chartered accountant with additional certification in internal audit and anti-money laundering. He is currently associated with Upright Management Consulting since 2009 as senior director. Prior to this assignment, he worked more than 30 years with leading financial institutions and international accounting firms on various senior positions. His expertise are in regulatory compliance, including anti-money laundering, combating financing of terrorism, AML and FCT, and sanctions, internal controls, internal audit, corporate governance, business profession format transformations, financial and management accounting, and other areas. So I welcome Mr. Badr. To you, Mr. Badr.
Thank you, Mr. Asif Zaman. Can you see my presentation on the screen?
Yes, it's apparent.
Is it okay?
Yes.
Okay. So thank you for your introduction. I will start this presentation. As Mr. Asif mentioned that our today's topic is AML CFT laws and its implication on businesses in UAE. Before I start my presentation, I just want to give a brief about this money laundering crime. Money laundering crime is actually the crime of cleaning the dirty money. The dirty money which criminals are obtained by committing some crimes. That crime can be drug trafficking, human trafficking, bribery, frauds, murders, environmental law violation, etc., etc. So the money they get, they want to clean this money by using the financial system. This is a global issue being faced by all countries in the world. It is said that current volume of money laundering and financing of terrorism is about 2% of global GDP. And in terms of absolute value, it is around $800 billion to $2 trillion. So all the countries have to fight against money laundering and terrorist financing. So it is also said that 2% of this amount, which I mentioned, is seized through this AML and CFT measures, and half of it is confiscated. But still, it's a big challenge for all countries to fight against money laundering and terrorist financing. So, to combat money laundering and financing of terrorism, Financial Action Task Force, about which Mr. Asif has recently mentioned, this is an intergovernment organization established in 1989. There are 40 famous recommendations from FATF, which are considered as international standards to be applied by all countries to fight against money laundering and financing of terrorism. So all the countries have to make laws and regulations according to these standards. So with this background, I will continue my presentation. Is it okay? I'm on this next slide. Okay. So the contents of this presentation is that first we'll talk about a few definitions, then international organization, including FATF, laws and regulations in UAE, minimum statutory obligations, roles of executive office, common requirements, and implications on business. Let's talk about the definition of money laundering. I know many of the participants know, but it will be a refresher for them. On the right-hand side, there is definition given by FATF, which is very simple definition: the conversion of or transfer of money to disguise or conceal its illegal origin, which I explained in the beginning. On the left-hand side, there is legal definition, which is according to the Federal Law number of 20 of 2018 of UAE law. So it says that engaging in any of the following act willfully, having knowledge that the funds are the proceeds of felony or misdemeanor, that is predicate of office. Predicate offenses are some crimes which have been listed in one of the standard of FATF, which are in all around 21 crimes. So any funds transferring or moving proceeds or conducting any transaction with the aim of concealing or disguising illegal source, concealing or disguising the true nature, acquiring, possessing, or using proceeds. So all these actions comes under the definition of money laundering. This is how money laundering is done. There are three phases: placement, layering, and integration. Placements means to bring that money into financial system. So these money launderer, what they do, they open the accounts, bank accounts, either one account or many accounts. They split those money in small amounts and deposit in those accounts, or they open accounts in many banks, more than one banks, and deposit there, which is called smurfing actually. So this is how they try to place. And then they do layering. Layering means that they do the transactions which has no any economical logic, transferring from one account to another account, issuing credit cards from them, using those credit cards, transferring from one country to another country. So they try to put layers behind that dirty money, on the top of that dirty money. Then there is phase of integration. Once they feel that this money is now well known, that this is their genuine money or clean money, then they use this money to convert into luxurious assets like real estate properties, yachts, and other goods. So normally these are the three phases which are used by the money launderers to clean their money. Also, there is financing of terrorism, defined by the law here, which means committing any act of money laundering, being aware that the proceeds are wholly or partly owned by a terrorist organization or terrorist person, or intended to finance a terrorist organization, a terrorist person, or terrorism crime, or providing, collecting, preparing, or obtaining proceeds or facilitating their obtaining. So all these acts come under the definition of financing of terrorism. There is a little difference between money laundering and financing of terrorism. When we come to the source of fund, in case of money laundering, it's always from criminal activities and illegal sources. So it's a dirty money. But in case of financing for terrorism, it can be from criminal activities or legitimate sources that fund terrorism. Like there are people who may like certain terrorist organization and they contribute to them out of their clean income. Other difference is the purpose. In case of money laundering, the purpose is to conceal illegitimate source and legalize illegal proceed. But in case of financing for terrorism, conceal illegitimate or legitimate source and use for financing terrorism. There's another crime which is financing of illegal organizations. These are the organizations whose establishment is criminalized or which exercise a criminalized activity. So when these organizations are established, either they are registered or not registered, purpose of establishing is to do criminal activities. These can be established as shell companies, like they don't have any exact location or presence, or front companies, like they have location, but they're not actually involved in real trades. So transactions are done by issuing fake invoices, fake trades. This sort of transactions are done, but actually the purpose is to try to make the dirty money to clean money and do some criminal activities. Non-profit organizations also come under the same group of illegal organizations if they are not properly registered. Now I'll talk about the international organizations who are there for fighting against money laundering and financing of terrorism. The first organization is, of course, United Nations. United Nations is involved from the beginning since 1989 against the drug trafficking and money laundering and crimes. It has a special organization for global crimes and money laundering. Then also United Nations has established a sanction list where those who are involved in terrorist financings or terrorist activities, person as well as organizations, they are listed there. Then we have FATF, we talk about it. Then we have MENA FATF. It is actually a FATF type regional organization. There are other regional organizations of FATF, but this MENA FATF is part of Middle East and North Africa. UAE is actually founding member of MENA FATF, which was established in 2004. Then we have Egmont Group of Financial Intelligence Units. This was organized, established in 1995. It's a group of financial intelligence units of various countries. The purpose of that group is to cooperate with each other, to exchange the information, and to exchange the information about the latest trends in money laundering and terrorist financing. So these are the 40 recommendations issued by FATF and which are considered as international standards for anti-money laundering and countering terrorist financing. There are 7 parts in it from A to G. F and G part is about the powers and responsibilities of competent authorities and other institutional measures. So here the responsibilities of various countries come. By applying these responsibilities, they have to establish the laws, regulations, standards covering all these recommendations. And UAE has done excellent job in establishing laws and regulations, which we'll see in next slides. Also, I want to mention that 5, 6, 7, and 8 recommendations talk about terrorist financing offense, targeted financial sanctions, targeted financial sections, and about non-profit organization. If you see recommendation number 22 and 23, they talk about the designated non-financial business practices. And 24 and 25 talk about the beneficial ownerships. So every country has to issue laws in relation to these groups also, and UAE has done that also. Then this is the list of key laws and decisions and resolutions established by UAE authorities. I will try to explain them briefly. The main law is law number 20 of 2018 about anti-money laundering and combating the financing of terrorism and financing of illegal organization. So here we start to see what legal framework UAE has. This is the main law, and UAE is always proactive in establishing the law. This law has actually superseded the law number 2 of 2002, which was criminalization of money laundering. And if you go down, Federal Decree number 26 has some amendments to this law. So the latest law on anti-money laundering is law number 26 of 2021. Then there was Cabinet decision number 10 of 2019, where they have issued implementation regulation to implement the law number of 20. So it's an elaborative decision which they issue. Then there is another law number 7 of 2014 on combating the terrorism offenses. Then Central Bank issued notice number 79 of 2019, under which Central Bank issues the guidelines to implement the law and decision. And in June 2021, with other notice, central bank has updated. And this is actually very excellent documents, which I'm sure using all the financial institutions and DNFBP, it's a 114 pages documentations which can be used as a checklist. And the good thing is that it has reference to law number 20 and cabinet decision number 10 also. Then there was cabinet resolution number 74 of 2020. This is very important. It was regarding terrorism list regulations and implementation of UN Security Council resolution on suppression of combating of terrorism, terrorist financing, and proliferation of weapons of mass destructions. So under this resolution, Executive Office of UAE, which is an independent office to address terrorist financing and proliferation, has issued the guidance on target financial sanctions. Then there was cabinet resolution about UBOs, ultimate beneficial owners, number 58 of 2020, under which the business institutions were asked to disclose the ultimate beneficial owners. Then there was notice number 3556 from Central Bank about joint guidelines on AML and CTF. This is also very good guidelines. It is a joint guidelines of 6 authorities, including Central Bank, DFSA, ADGM, Securities and Commodities Authority of UAE, Ministry of Justice, and Ministry of Economy. So under these guidelines, they have prescribed what are the correct practice and what are the wrong practices in governance, 3 lines of defense, customer due diligence, risk assessment, reporting suspicious transactions, staff training, record keeping, everything they've covered, and they've mentioned what are the correct practices and what are the wrong practices. And in the end of these guidelines, they've also provided the findings of the examination of DNFBPs, which they have done during 2020 and 2021. Then there is Federal Decree number 26 of 2021. As I said, under this decree, they have done some amendment in this law number 20 of 2018. In addition to all these laws and resolution, there are specific regulations issued by Central Bank and standards like standards for exchange houses by Central Bank, guidelines as we talk about, and there are many guidelines, specific guidelines issued by Central Bank and Executive Office. Thematic reviews also they have shared, and they are also very good documents. Typologies also they have issued. Under the typologies, they mention that what are the trends these money launderers and terrorists are following. And without mentioning the name, they disclose some of the real cases also in those typologies. And outreach sessions workshops, which in most cases, Central Bank and Executive Office are doing on various topics, and they're updating or they're telling in those workshops that what are the expectations from the financial institutions and DNFBPs. So all these laws and regulations are applicable to financial institutions and DNFBPs. When we talk about the financial institutions, number one is bank, financial companies, exchange houses, and registered hawaladars. Those hawaladars which are registered with central bank. Insurance companies, agencies, and their brokers, securities and commodities brokers, dealers, advisors, and investment managers, virtual asset service providers, and other financial institutions not mentioned above. On the DNFBP sides, real estate brokers and agents, accountants and auditors, trust and company service providers, dealers in precious metals and stones, and legal and lawyers. And for some of them, particularly real estate brokers and dealers in precious and metals, specific guidelines has been issued by executive office. Mainly executive office is supervising this sector actually. So I will also tell something about the Executive Office for Control and Non-Proliferation. This office acts as a national lead to coordinate and liaison implementation of targeted financial sections with all the federal and local governments, stakeholders, including financial institutions and designated non-financial business and profession, and has issued the guidance on targeted financial sanctions on FIs and DNFBPs. The Executive Office is mainly responsible for receiving and processing grievances against listing in UN and local list decisions, receiving and processing application to use frozen funds as per section list, working closely with Supreme Council with regard to the local listings, circulating update to the local and UN list to the government and private sector, and coordinating and exchanging information between government agencies. So this office has very important role and very active now. And this is what I'm saying, that UAE authorities has done very excellent job in implementing the FATF standards. So this executive office is continuously updating those who are registered with the office, any new names listing in the United Nations list or local sanction list, and keeping updated list, local as well as United Nations, on its website, and providing guidelines and keeping all these materials on their website, and also conducting outreach sessions and other role which they are now explaining to the financial institutions is the combating actually this proliferation actually. So they have list of the commodities which can be imported or exported, or which can be used for dual purposes, for which special permission is required, and they're putting responsibility on the financial institutions to identify those goods for which LCs are opened or export and import documents are opened, to identify which can be used for dual purpose, and see from the list of executive office or inquire about that. So this is the role this executive office is playing. So the summary of minimum statutory obligations as per these laws which I have described, these are the requirement. Number one is to identify, assess, understand risks. I'll take a little time to explain that business-wide risk assessment as well as AML, CFT, risk assessment has to be done. Every financial institutions and DNF BP has to identify inherent risk, probability of occurring that risk, and implication of that risk. Then they have to see that risk is high risk, medium risk, low risk, or any other classification they're giving, like medium high. Then they have to see what mitigation measures they have, like policies and procedures, controls. And under the controls, it comes the segregation of duties, monitoring, reporting, internal as well as external, and many other controls. Then they have to assess the residual risk. And they have to do all this not only qualitative, but quantitative as well. So this is the requirement which regulatory authorities are now pursuing for risk, to follow risk-based approach. To define the scope and take necessary due diligence measures, to appoint compliance officer, to put in place adequate management and information system, internal control, policies and procedures, to put in place indicators, to identify suspicious transactions, to report suspicious activities and cooperate with competent authorities, to promptly apply directives of competent authorities, and to maintain adequate records. So these are actually the summary of minimum statutory obligations which has been given in the guidelines of central bank as well. So it requires a compliance program where every institution has to appoint compliance officer, apply risk-based approach, should have policies and procedures, a good compliance training program, and an independent review and audit at least once in a year. So what are the common requirements which an institution should keep in mind? Know your customer, identify your customer, who is the customer, know your real beneficiary. So who is ultimate beneficial owner or politically exposed person? Know the source of fund, know the economic logic of the transactions when a customer is doing any transactions, monitor transactions and keep record, screen your customers. So there are certain guidelines then when the customer should be screened. Be vigilant and timely report suspicion. Do not advise customers of suspicion, and train your staff. So these are the common requirements which should be addressed in your policies and procedures. And those policies and procedures should be effectively implemented. Now, my last slide is about the implication on business. As you have seen, there are a lot of requirements, a lot of statutory requirements, which I have transformed in common requirements. So after reading all this, the first implication which institution always tell is that cost of compliance. Yes, there is cost of compliance which you have to incur to avoid cost of non-compliance. The simple answer is that cost of non-compliance is many times more than cost of compliance. So to comply with all the regulatory requirements, you can avoid penalties, you can protect your institution's reputation, and you can improve ethical business practices. And you can improve confidence on your local and foreign investors and partners if you're going to establish partnership outside UAE or within UAE. So this will help you. Yes, you have to address business relationship risk, either with your customer and clients or counterparties. And when you are establishing business relationship, you have to focus on the nature of business of your customer and counterparties and purpose of relationship. That is very important, which you have to take. From the customer or client's point of view, the customers have to cooperate with these financial institutions and DNF BPs in providing transparently full information and disclose those information which are required under the regulations. This is why now every bank has very big account opening form. And in addition to that, bank is also asking some declarations, and other institutions are also asking this requirement, like security brokers and others. Due diligence when dealing with FIs and DNBs. So financial institutions and DNFBPs, when are dealing with each other, they have to do their due diligence also, particularly when they are dealing with the institutions which are outside UAE. So normally they use AML questionnaire to do this due diligence. So since I have very limited time, so I'll end my presentation here and hand over to Mr. Asif. Asif, to you, please.
Thank you very much. And
there's some problem with your voice, Asif.
Okay now? Hello?
No. It's vibrating.
Hello? It's okay?
Yes.
Okay. Thank you very much, Badr Saab. And then our next speaker is Alia. Miss Alia Noor from Ahmed Al Akbari Chartered Accountant. She is the associate partner over here. Miss Alia has 2 decades of professional experience in providing advisory services in the field of finance, value-added tax, economic substance regulation, UBO, and anti-money laundering, finance, audit, fintech to diverse industries, including FMGM, hospitality, aviation, and others in Pakistan and GCC states. Alia currently hold qualification as CIMA, FCMA, MBA, along with certification in fintech and digital mindset and other things like that. So as Mr. Badr have mentioned, there are some important points to be noted that these regulations are now implemented and they are enforced now in UAE. So whoever are the effective of these laws and regulation, they must be registered with authorities and timely reporting on this anti-money laundering, which is, I think the platform is called GoAML in UAE, and that's the platform in which you have to get registered and on timely basis reports as per the requirement for the authorities. To you, Alia.
Thank you, Mr. Asif. Let me share the screen. Can you hear me clearly?
Yeah, it's fine.
Okay. Assalamu alaikum and a very good afternoon to all of you. Once again, we will start with a refresher. Everything has been known by all the participants, I assume, but still there has been so many problems facing for many of our clients that they have not fully compliant. Either they don't have policies and procedures in written. That may cause them a penalty of 50,000 dirham. And some of them are not aware that they are required, it's a mandatory requirement to train their employees. So these are the lackings, and some of them are not doing the screening. So there are 4 pillars that you have to comply by all means. So let's go quickly as a refresher so you can be more compliant in UAE to avoid the penalties. So how was this money laundering initiated? It is said that the term money laundering originated from American-Italian mafia Al Capone. He was the first mobster to be featured on the cover of Time magazine. And he was known for his brilliant mind that distinguished him in the criminal underworld. He allegedly purchased laundromats and mixed their illegal profits from prostitution and bootleg liquor sales with legitimate business sales from the laundromats to obscure their illegal profit. That's what is called the money laundering. And what's happening today? Money laundering is a process of making money from illegal sources and appearing to have legitimate sources for such money, in order to avoid regulatory scrutiny, typically by transferring it through a series of legitimate businesses. Whereas the terrorist financing is the financing of terrorist act and the act of terrorist and terrorist organization. This includes dealing with entering into transaction with a terrorist, which often includes money laundering. So how does it happen? How does it take place? First, they have to raise the funds through donation, self-funding, salary, or criminal activity. Then they transfer those funds to terrorist network, wire transfer, cash smuggling, cards, havaldars. Using those funds, they might purchase weapons, bomb-making equipment, or cover living expenses for a terrorist cell. Here comes the role of anti-money laundering, which act to seek to deter criminals by making it harder for them to hide ill-gotten money. In UAE, as Mr. Badr has already explained, there are two main laws, that is Federal Law number 20 of 2018 regarding anti-money laundering and combating finance terrorism and illegal organization. And secondly, the Cabinet Decision number 10 of 2019 concerning the implementation of degree law. So it is applicable to whom? Financial institutions and DNFBPs, designated non-financial business and professionals. And the Ministry of Economy is entrusted with the responsibility to supervise the DNFBPs. Remember, money laundering is a complex process and it involves several offshore companies and other actors. Recent scandals have shown banks play a role in money laundering. But the corrupt also needs the lawyers, the accountants, the real estate agents to hide and spend their dirty money. Without them, money laundering on large scale would be impossible. Here comes the role of the gatekeepers. The law has enforced great responsibilities on designated non-financial business and professionals. These are broker and real estate agents, dealer of precious metal and gemstones, providers of corporate service and trust, lawyer, notaries, and other independent legal professionals and legal accountants. Who are excluded from these categories? For real estates, contractors, material suppliers are excluded. For accountants, consultancy services not related to finance are excluded. For precious metal dealers, business dealing in non-precious metals are excluded. For trust and service providers, marketing and similar consultants are excluded. Recently, if you have joined this session conducted by MOE last week, they have prepared and summarized the sectorial risk assessment against 2019 for year 2022, national risk assessment. As you can see, the higher risk assessed by MOE Ministry of Economy is real estate brokers and agents. Secondly is the trust company and service providers. Thirdly is the dealers in precious metal and stones. Whereas accounting, auditors, and legal and lawyers are placed on a medium risk by MOE. So it means that there will be high scrutiny for real estate agents and brokers, dealers in precious metal stores, and trust and company service provider. It doesn't mean that auditor, accountants, and legal lawyers are excluded. They won't be scrutinized. They will be, but they are on the highlight. So who are the broker real agents? And when they enter into operation in the interest of the client for purchase and sale of real estate, the developers, brokers, and agents. Now, how is it done? Very simple. They buy a large house, shop, or mall, but showing less value on paper, while the actual market value of these purchased properties is much higher. This is done so that they can reduce their tax burden. Thus, black money is collected through tax evasion. Second, very common and popular example is the establishment of a fake companies known as the shell companies. Now here, shell company exists only on paper, not in the real world. There's no production take place in such companies. Launderers show large transaction in these shell companies' balance sheet. He takes loan in the name of these companies, get tax exemption from the government, and does not file income tax return. And through all these fake activities, accumulate a lot of black money. Fake financial records, false documents are prepared. Excuse me. Now, how does it work? It's very easy. They choose a tax haven, and then create a corporation, and then hire a nominee to run your affairs. Then they open a bank account in that region or another haven, and then they transfer those money through smuggling or location or wiring, and then they spend those money. Now, real estate agents and brokers are required to file on Go AML REAR. That is effective from 1st July 2022. They need to report the transaction relating to the purchase, sales, or freehold real estate which involves cash or virtual asset. When the REAR required to be filed? Only to the transaction of purchase and sale of freehold real estate where the payment is by or any of the following, whether a proportion or the entire property. Physical cash equal or exceeding 55,000, single payment or through several transactions. Virtual assets, transaction where converted from or to a virtual asset for a proportion of the entire property value.
This point please again specifies to the people, because they are listener, they are saying we have to keep the space a little bit slower so they can understand.
You want me to slow down?
Slow down the pace. The URL. Okay. And then the important thing is that this is very important point, that physical cash equivalent or exceeding 55,000, single transaction or through several transactions. You can go on. Alia.
Okay. Now this is the new requirement. It is implemented effective from July 1st, 2022. All real estate agents, they have to report the transaction related to purchase, sale of freehold real estate, which involves cash or virtual assets. Okay, I'm going to repeat it. When it is required to be filed, when you are making the payment is by way of any of the following, whether for a portion or for the entire property. Either you are buying the whole property or you're paying in portion. Physical cash equal or exceeding 55,000, single payment or through several transactions. You have to file on REAR on GoML portal. Virtual assets, transactions were converted from or to a virtual asset for a proportion of the entire property. Now, what are the obligations of DNFBPs when it comes to REAR filing? Real estate agents and brokers have to obtain the record the following: identification documents of the buyer and seller, that is ID, passport, and receipt, invoice, contract, and purchase and sale agreement. But remember, REAR is an additional reporting requirement. It does not exempt you from the existing AML CFT obligation to submit the following types of reports via GoAML, that is your suspicion transaction report, suspicion activity report, and partial name match report. These are mandatory, and in addition to that, you have to file REAR. Now, coming to dealers of precious metal and gemstone, they are also highlighted as a high risk on Ministry of Economy scale for 2022. When they perform any single cash transaction or several seemingly related transactions with a value of 55,000 or more. These include the producer, broker, agent, cutter, polisher, refiner, jeweler, and manufacturer. Now, there was another circular in 2021 where they are required to report their precious metal and stone report at DPMSR portal on GoAML. And the three criteria are when they are doing transaction with a resident individual, they have to file on DPMSR. What to obtain? For that, they have to obtain identification documents, Emirates ID or passport for cash transaction equal or exceeding 55,000, and register the information in the Financial Intelligence Unit FIU GoAML using the recently created Dealers in Precious Metal and Stone report. You have to create it in that portal. The second one is when you are doing transaction with non-resident individual, you have to obtain identification document, ID or passport for cash transaction equal to or exceeding 55,000, and register the information in the FIU's GoAML platform using the newly created DPMSR. And the third criteria is transaction with entities and companies. Obtain the copy of trade license in case of entities, identification document, Emirates ID or passport of the person representing the company in transaction, equal to or exceeding 55,000 in cash or through wire transfer, and register the information in the FIU's Go AML using the newly created DPMSR. The third one is the lawyer, notaries, and other independent agents, professional independent accountants, when they prepare, conduct, execute financial transactions for their customer in respect of the following activities. They are buying and selling real estate, managing money that the client owns, managing financial saving or stock account, establishing, operating, or managing companies or legal arrangement, buying and selling commercial entities, and additional guidance also provided for auditing, accounting, tax consulting firm, chartered accountants, and tax specialists. Number 4 is the provider of corporate service and trust. They are also on the high rate scale of MOE's tabular risk assessment upon performing or executing a transaction on behalf of their customers in respect of the following activities. They work as an agent in establishing companies, working or preparing someone else to work as a director or company secretary or as a partner in the company, providing a registered office, business address, place of residence, address for correspondence, administrative address of a legal person or legal arrangement, act as a trustee for a direct trust fund or to perform a similar function for another form of legal arrangement, working or preparing another person to act as a shareholder for another person. Now, how do you prevent money laundering? There are 4 mandatory requirements. These are also called the 4 pillars. These are, you have to designate a compliance officer, which is also called the MLRO. You need to have a written internal policies, procedure, and controls. Many of the companies have internal policy procedure, but they are not written. They are not approved by the directors of management of the company, and they are not being implemented and they are not being updated. So please ensure that you have a written internal policy procedure control manual, and it is approved and updated regularly whenever there are new circular, a new update from the regulatory authority. You have to incorporate it. You have to give an ongoing training for employees. You need to update them. What are the new requirements? And then you have to do the customer due diligence. Any failure of these 4 pillars will result in a penalty of 50,000 dirham. Now, taking in the actions taken by the UAE government, the regulatory authorities, the role of an AML compliance officer has never been more challenging. So let's have a quick look. What is the first pillar, MLRO rules and requirements? The compliance professional who oversees the firm's anti-money laundering, countering the financing of terrorist framework, should be giving the legal implication of the role. Your MLRO should be at least a director level employee with the knowledge, experience to be able to make decision. And what are the roles of an MLRO? You have to develop a risk assessment framework. You need to develop the policies and procedure, that is a compliance manual. You have to check the onboarding customers, high-risk customers. You're doing the KYC. You are doing the monetary compliance. He has to report to the management body as well. He has to report to the regulatory authority through reporting suspicious transaction. And he has to ensure that proper training and awareness are provided within the employees of the company. The second pillar is the written internal policies, procedure, and control. Now, AML safety compliance, effective risk management should be embedded in a company's strategies and practices. Now, how does it work? The development of internal policy, procedure, and control is the core of all pillars. The second pillar addresses how your business stays in compliance, how you ensure that all written policies and procedures are being implemented and upheld. This pillar probably has the most variance amongst all the pillars because not all the businesses operate in the same manner. So what will be the objectives? The objectives of written policies, procedure, and control should be to ensure that company acts in accordance with the requirements of all relevant legislation, regulation, guidelines, standards issued by licensing authority. You need to ensure that adequate arrangements, including sufficient resources, are in place within the company to implement AML CFT regulation and monitoring of the same to ensure employees are aware with the up-to-date latest requirements. It should establish an environment to comply with regulatory requirement to promote the best interest of the clients and integrity. And number 4, to require all appropriate employees to attend the anti-money laundering training sessions so that all employees are aware of their responsibilities under compliance manual. And the third pillar of AML training is to get your employees trained. The financial institutions and designated non-finance business professionals in the UAE are required mandatory to train their employees on anti-money laundering and combating the financing terrorism. What should be the objectives of the training, Emily? The objectives are that your employees should have in-depth knowledge and understanding of the following: money laundering, what is money laundering, terrorist financing, what are the methods, what are the typologies relevant to your organization, the AML policies, procedures, systems, and controls adopted by the company, what is their role, how they have to imply it, the skills to identify suspicious activities and unusual behavior of our customers and report them to the AML compliance officer. If they are not aware what are the suspicious activities, what are the suspicious transactions, they will not be able to provide any report to the compliance officer, and the compliance officer will not be in a position to report it on the GoAML portal. The responsibilities and roles of each individual in the organization towards countering money laundering and financing of terrorism. Now, who need to be trained? Training should be given to employees permanent or temporary basis, training to new employees who have joined the organization recently, refresher training to the existing employees on an ongoing basis as new circular, new updates are available whenever. What should be frequency of training? MLRO should determine the frequency on a risk-based approach. Whenever updates from regulators, law enforcement agencies, authorities, intergovernmental bodies, etc. Now, the last pillar is the fourth pillar, which is called the customer due diligence. You cannot adopt an ostrich approach that this is our customer, this is our existing customer, so we don't need to do anything. We have been doing business for 4 years or 5 years. No, that's not the correct approach. It will cause you harm. What you have to do, the 4 components of the CDD is customer identification and verification, beneficial owner identification and verification, understanding nature and purpose of customer relationship to develop a customer risk profile, ongoing monitoring for reporting suspicious transaction, and on a risk basis, maintaining and updating customer information. Now, customer due diligence, what is it? It's a process, simple process of identifying or verifying the information of a customer or a beneficial owner, whether a natural or legal arrangement, and the nature of its activity and the purpose of the business relationship and ownership structure and control. The FATF and UAE cabinet decision defines what is a beneficial owner. The beneficial owner, the natural person who ultimately owns or exercises effective control directly or indirectly over a customer or the natural person on whose behalf a transaction is being conducted. It includes a natural person who exercises effective ultimate control over a legal person or legal arrangement. Now, the identification of an ultimate beneficial owner is the key preventive measure of the customer due diligence rule. Remember, it is the key preventive measure to identify your UBO. Now, financial institution and DFB should, as the case may be, undertake CDD measures in the following cases as per Section 3 Customer Due Diligence, Article number 6. When you are establishing the business relationship, you have to do the CDD. When you are carrying out occasional transaction in favor of a customer for amounts equal to or exceeding 55,000, whether the transaction is carried out in a single transaction or in several transactions that appear to be linked, you have to do the CDD. Carrying out occasional transaction in form of a buy transaction for amounts equal to or exceeding 3,500, where there is a suspicion of a crime and where there are doubts about the veracity or adequacy of previously obtained customer identification data. There are 2 types of due diligence. Simplified due diligence, the regulation allows you to carry out simplified due diligence where you are satisfied that the business relationship or transaction present a low risk of money laundering or terrorist financing. That may include verifying the identity of the customer and beneficial owner after establishing the business relationship, updating the customer database on a less frequent interval, reducing the rate of ongoing monitoring and transaction tests, and concluding the purpose and nature of the business relation based on the type of transaction or the business relationship that has been established without the need to gather information or performing a specific procedure. You may apply this when there is a low risk of money laundering. What is the enhanced due diligence? It must be applied when the risk of money laundering is high. Now, when a person established in a high-risk third country, a politically exposed person or a family member or known associate of a PEP, that is politically exposed person, or any other situation that presents a high risk of money laundering or terrorist financing. When it should be applied, you should have additional information of customer beneficial owner identity. You need additional information for the purpose of business relation or reason of the transaction. You need to update the CDD information of the customer and beneficial owner more systematically. You need to identify the source of the funds of the customer and beneficial owner. Additionally, ongoing monitoring procedure to identify unusual or suspicious transaction. For high-risk money laundering customers, you need to obtain approval from senior management to commence the business relationship. So stay compliant and protect your company so that you can protect your company for penalties, prevent from fraudulent transactions, screen your customers, do your KYC, perform your CDD and EDD. UAE has tightened measures to combat money laundering. So stay tuned with us for latest updates. Thank you so much. Over to you, Mr. Asif.
Thank you very much. Very nice presentation by Mr. Badar and Ms. Alia. And hopefully that people have some questions, I think. So question is, Alia, for you, how to train?
Yes, how to train. You need to train the MLRO. This is the responsibility of the MLRO to conduct training sessions. What are the new requirements? What are the latest requirements? How to conduct, how to identify suspicious transactions, how to identify the suspicious activity, how to report. They have to see by transaction. See if your customer is not providing you KYC documents, if he's reluctant, if you are not able to identify the sources of fund, the wealth, the deposits, the transfers, then you have to identify and report to your compliance officer. These points, your compliance officer has to train all the employees, either new or the old ones. I hope you understand it. Thank you.
Mr. Badar, are you there? Mr. Badar? Okay, there is another question. I think Mr. Badar has left or is busy.
No, I think his mic is off.
I think the other question is that executive management must be trained as well as they will be able to understand and stand still in promoting compliance culture. Ali?
Yes.
Yes, sir.
Mr. Badar is there? Okay, Mr. Badar. Yeah, please.
Okay.
Yeah. There's a question.
Yes, it is requirement. Yes, I can read that question. And the person who has wrote this question, who has written this question is right. Yes, executive management should also go for the training. And this is also a requirement of the regulations that executive management should be provided training as well. So they can make right decisions and they can know what are the regulatory requirements. And they can make correct decisions when things are coming to them for approval, like policies and procedures, approval of high risk customers. Yes, it should be there.
Thank you very much, Mr. Badar. Anyone else have any question or anything like that? They can ask now, or otherwise, I've shared an email address. They can send to me, and I can forward to Mr. Badar or Ms. Alia for any further inquiry. And I'm very thankful to every one of you have attended this webinars, and hopefully, and you have learned something from us. And then Alif, Ahmed Al Akbari Chartered Accountant tries to bring best speaker from different organization. Mr. Badar is running his own consulting as an upright organization, and then we try to bring people who are in expert in this all subject. So again, thank you very much, everyone, for attending this event. Thanks.